analysts believe the Nigerian equities market will sustain the mixed sentiments witnessed this week as investors await the outcome of next week's Monetary Policy Committee meeting. Patrick Ejumedia, the head of Sterling Asset Management and Trustees Limited, joins me now for more market updates. Thank you so much for joining us on the show today, Patrick.
Thank you, David. Good to be with you.
We earlier went over to the fixed income market to gauge investor sentiment, and then we had that conversation there with our colleague there at Data Bank looking at the equities market in Ghana. For you, let's talk about the movements you've seen here, the overview of literally the month of February versus what we saw pan out this year, this week.
Oh, okay. So in the month of February, what you will see is that the market has been a bit kind of stable, particularly towards the end of this week. Now, for the whole of this week, what you see, if you have gone through the data, you see that the market opened with a negative trend. And even up till now, its market is still going that negative trend, except for Wednesday that the market had a positive growth. Now, of course, these factors that would have been driving this growth, particularly for this week, is the macroeconomic conditions that the economy is having, exchange rate and exchange rate crisis and inflation, that is making the markets a kind of not like an investment area for many investors. As well as what we see again is the, what else? The
higher yields environment in the fixed income market, that's also getting investors' attention towards that side of the market.
Because the auctions that took place this week, the NTB auction and the federal government bond auction that took place, also again swiped money away from the equity market, and that's why we saw that trend throughout this week.
So would you say that the earnings, the full-year earnings we saw, were not enough to lift sentiment in the market?
Yeah, we won't say that, but the question is about what exactly is driving the market. If you notice, firms that have foreign assets, that have assets, those are the firms that are actually driving the market.
Yeah.
So of course, if that trend continue, then we'll continue to see those kind of trend. But as long as the trend is not there, then we might not see it continue to drive the market the way it is.
Yes, and one of the big conversations we also have, and like I also hinted earlier, is the fact that a lot of eyeballs are also looking at the interest rate environment we have here and how it's also affecting sectoral sensitivities. For you, what sort of rate hike do you think we might likely see here, putting a peg to the basis point, and how will the market also respond to the next moves from this new governor of the Central Bank of Nigeria, Olayemi Cardoso?
Of course, it's all over the place that the rate is likely to go up. Some have said, like we said earlier, about 300, some have said 500% basis point going up. But the issue is, to determine that will depend on the value, the rate at which money supply has also gone up. Again, the major role of the CBN is to ensure that they control inflation and to stabilize exchange rates. And if you see, money supply has gone up between December and January, by about 17%, from about 70 trillion to about 90-something trillion. And of course, that puts a worry to the Central Bank of Nigeria to be able to look at what policy exactly, and that means that they are going to increase the rates. Yeah. Again, exchange rates again is a major goal of the CBN to see how they can stabilize it. And again, because the exchange rate is giving us crisis now, we're having that exchange rate crisis now, it's become obvious that the CBN will also increase the rates.
And we also had inflation numbers come out this week too, 29.9%. We hit the 30% mark literally faster than we anticipated.
Just that we expected that we'll get that value by December. But we'll surely get there as the way it is going, because if we get to that 39, of course, we know what is driving it. The unification of the exchange rate at the fuel subsidy, and of course, food crisis that we are having. These factors are the key factors as what is driving these values up.
Okay, now let's talk about the sentiments we've also. Yes, it's clear that we've had mixed sentiments when we are looking at sectoral performances. But for you now, yes, the quiet still remains with insurance, banking, oil and gas, industrial goods, consumer goods. Your take on market dynamics at play?
Yeah, you see, what will basically play out mainly, because now, of course, we expect the market to be very quiet, and because nothing is really happening in the market at the moment. But what will drive it, like I said earlier, are those firms that have foreign assets. Exchange rate plays a lot of role in increasing their value, and once their value goes up, the demand for those company shares goes up and their share price goes up. So you see those sectors that have foreign assets, you see them, their prices is likely to go up. That is, if the exchange rate continues to go the way it's going now, But hopefully we expect, given the policies that the government is putting in place to black the exchange rate, we saw the exchange rate coming down to 1.7 about yesterday. So it's possible, if the exchange rate goes down, then we might see some form of stability in the market.
And one of the filters of news we also had at the start of this week was also looking at the agreement between cement producers as well, talking about the industrial goods now. We had cement producers also reach the agreement with government that would see price levels of a bag of 50 kg bag of cement go from 7,000 to 8,000 within that range, from the highs of about 15,000 at some markets. Let's talk about how these firms here are also addressing issues around the FX volatility and the cost of production.
Yeah, it's a big issue, because if you notice, one of the companies, the production companies, declared a loss, and they tied it to the FX issues, FX crisis. And so many manufacturing firms at the moment are having those kind of issues. So it has to do with what the value, as the exchange rate continues to depreciate, these companies continue to face this kind of problem. Except provisions are made for them, or except government wouldn't want to go back to the area where we were doing some form of window for subsidizing for producers. I don't think they want to go back to that era anymore. But except something is done, except we're able to stabilize the exchange rate, if that is done and they are importing some of the materials that they are using to produce some of these things, then it will be a loss for them.
And that's why a whole lot of weight also holds on the next decisions that would have from the Central Bank of Nigeria as well. Yes, we've also seen the raft of reforms come. We've had at least 3 different reforms, talking about the ultimatum, the 24-hour ultimatum on the sale of excess dollar stock from banks. We've also had the lifting of the IMTO's rates quoted by the IMTOs. We've also had the stopping of the cash payout of personal travel allowance and BT as well. Now, do you think these reforms will at least help sanitize the market, ease the pressure, and then the targets? We also heard Murphy this week saying that we're looking at attracting about $10 billion in terms of FX to just inject some level of liquidity. Do you think we can achieve these near term and then have these businesses stabilize?
Yeah, one thing is very certain. If you are running a market-driven economy, then you allow forces of demand and supply to play. Now, but again, it's difficult for an economy to leave the exchange rate in the hands of just the market forces, particularly when the economy is not producing. Of course, you know that what is appreciating our exchange rate most times is because we are producing the oil that we are producing. Now, if you check our oil production, you see the value that it has either gone up or decreased. So, and that would play a role. Now, all the policies that the government have put in place now, it depends on how they are able to stabilize it. If government is able to stabilize it, if the 10 billion FX loan that they're expecting, if it comes in, then this will play a role. Of course, it will play a role.
Wrapping up the conversation now, let's also look a little forward, have some insight into what might pan out in the month of March. Then we'll have the full weight of the MPC's decision begin to filter in. We've already had inflation numbers. We've also seen few Qs also re-emerge as well. Conversations around whether or not we can achieve the timeline of petrol production, refining volumes and all of that, just to ease the pressure we have here. For you, what does March look like as we build more insights to come?
In terms of the market, 2 things are very certain. If we are able to stabilize exchange rate as the way the government is going, then we expect the market to be a bit calm as it is now. But if we are not able to stabilize the market, we will see again those firms who have assets, foreign assets, we'll see them driving the market up again. But if we're able to stabilize the exchange rate, we'll see the market to be a bit calm this March. We do not expect that the market will rise, because what drove the market over time between last year, say when the unification of the exchange rate policy and the subsidy removal was removed, that was when the market started rising.
So you say a full correction is about to set in?
Well, yes, if we're able to stabilize the exchange rate policy and the MPC, like we have said, is able to give his right impact on the economy.
Well, we'll definitely have a whole lot on our table as we focus on the Monetary Policy Committee meeting, and we're also still expecting a couple of full-year earnings to come through as well. Seplat is also one of those to release their numbers. We'll definitely have much more insight into how the year 2023 panned out for them. Thank you so much for speaking with us today, Patrick. It's been a pleasure speaking with you. That is Patrick Ejumedia, the head of Sterling Asset Management and Trustees Limited.